You have probably role that Bank of Canada out that you've on cryptocurrency, or even specifically and integrate economy moving forward. To kind of hear it from the Bank of Canada directly. So let me just take a minute to tell you a little bit about our guest speaker this morning, Deputy Governor Timothy Lane. He became the Deputy Governor of the Bank of Canada in February of 2009. In this role, he oversees the bank's analysis of international economic developments. As a member of the bank's governing council, he also shares responsibility for decisions with respect to things like monetary policy, financial system sustainability, and for setting the strategic direction of the bank. He oversees the bank's fund management and currency functions, notably including the bank's ongoing research and analysis of developments in financial technology, crypto assets, and digital currencies. Prior to the Bank of Canada, Timothy worked at the International Monetary Fund for about 20 years, and he was born in Ottawa, and he holds an honors Bachelor of Arts from Carleton University and a PhD in economics from the University of Western Ontario, although he did admit to me he wished he had come to the University of Calgary. So, ladies and gentlemen, please join me in welcoming Deputy Governor Timothy Lane.
Okay, well, thank you very much for that introduction. It's always a pleasure to be back here in Calgary, even if you are having your winter a little bit on the early side this year. Of course, you aren't having tornadoes like we are in Ottawa, so that's maybe there are some trade-offs there. This afternoon, or this morning, I'm going to be talking about cryptocurrencies, and of course, some of you here today may have actually purchased Bitcoin or one of the other cryptocurrencies or other products that have been launched in recent years. And I'm not here to give you investment advice, but rather I want to share with you our current thinking about these virtual products. Investors worldwide have taken an increasing stake in these products over the past few years, even as their market values have been fluctuating widely. Around 2,000 crypto products are now available, with dozens more launching every month. Trading volumes have grown almost 100-fold in just the past 2 years. Media interest in these products has inflated at a similar pace, often including a thick layer of hype. The recent collapse in the market valuations of many crypto assets, and in fact almost 40% of them are now worthless, seems to have done little to dampen some people's enthusiasm. Some investors see these products as potentially world-changing, others as yet another example of popular delusions and the madness of crowds. Possibly both are right. New financial or technological innovations often ignite market bubbles as users race to discover their most popular and profitable applications. Think of the dot-com bubbles of the late 1990s, when prices of many internet-related stocks shot into the stratosphere. While that period ended in tears for many investors, a handful of new companies that rose at that time, such as Google and Amazon, have brought about profound changes in the way we work, play, shop, and live. The Bank of Canada is not responsible for regulating crypto products. Indeed, the term cryptocurrencies is a misnomer. We prefer to call them crypto assets because, as I will discuss in a moment, they don't do a good job of performing the basic functions of money. But as they evolve, they may touch on the Bank of Canada's core functions: monetary policy, financial stability, payments, and currency. In my remarks today, I'll put these crypto developments in context, discuss the need for globally harmonized regulations, and highlight the Bank of Canada's research and responses to public interest in crypto assets. Bitcoin and many similar products were created in the hope that they would become the money of the future. How well do these products stack up against the money of the past and present? As well as bank deposits that can be accessed with a debit card or, for your parents' generation, by check. Let's consider banknotes. One of our core functions of the Bank of Canada is to provide banknotes that Canadians can use with confidence. This is perhaps the most visible aspect of our work. And in fact, my colleague Ted here from our regional office has a new banknote that we're about to issue in the next few days. We all take for granted that if you want to buy a coffee, you can pay with cash. This is the coffee shop deposits the cash in the bank and uses the funds to pay for beans and for baristas' wages. The cash is universally accepted by all parties. Why is that? First, banknotes are a simple but effective technology. Because a banknote is a physical thing, you can't spend the same note twice. Many Canadians still prefer the simplicity of cash for small transactions. And cash works even when the systems are down. I mean, in a tornado, for example. When the power goes out and people can still make payments using banknotes. Second, banknotes offer privacy for your transactions. You can use them without giving anyone your personal or your banking information. Using cash avoids the risk of being hacked or having your card compromised. Privacy is a controversial attribute, given that banknotes are a preferred medium of exchange for all kinds of illicit transactions. But for entirely legitimate reasons, most people place a high value on the privacy of their financial transactions. Third, we incorporate into our banknotes the most advanced security features to ensure that they are difficult to fake and easy to authenticate. We also work closely with law enforcement agencies to deter and detect counterfeiting. Fourth, the acceptance of money is a matter of social convention. People accept cash as a means of payment because they know that others will do the same. This convention is also enshrined in law. The legal tender laws basically say that the Bank of Canada and the Royal Canadian Mint issue banknotes and coins, and that's the legal tender of the country. Finally, banknotes, and not least significant, banknotes are denominated in dollars that offer stable purchasing power. The Bank of Canada helps preserve their value by keeping inflation low, stable, and predictable. Since the early 1990s, when we adopted inflation targeting as a framework for monetary policy, we've maintained the inflation rate very close to 2%. This has allowed Canadians to make spending and investment decisions with the confidence that the future purchasing power of money is secure and predictable. After a quarter century of successful inflation targeting in Canada, overall price stability has become the new norm. But some of us can recall the impact on households, some of us older people that is, can recall the impact on households of spiraling inflation in the mortgages hit 20%. While most countries have tamed inflation, some countries like Venezuela are coping with hyperinflation, which is causing widespread hunger and hardship. The trust and confidence that Canadians have in Canadian dollars and in their purchasing power is based on our track record and reputation. So where do crypto assets fit into this picture? Their proponents argue that the great benefit of Bitcoin and other forms of crypto cash is that they eliminate the need for public institutions like a central bank or for large commercial banks. People using this system, they argue, don't have to trust any individual or institution. That's true, but they do have to trust the technology and the way the whole system is set up. Cryptocurrencies are so-called because they use cryptography to validate transactions and to prevent fraud. Records are kept through blockchain technology, a digital ledger which is stored on thousands of computers worldwide that keeps track of every coin or token that's issued. Anybody trying to fraudulently use a cryptocurrency multiple times will likely be caught by the validation process that's running. The currencies a similar level of privacy as banknotes. They're as light and as borderless as air. You can transfer them across town and across continents much more easily than you can a suitcase filled with $100 bills. Of course, that has implications that I'll talk a little bit more about. A key feature of most cryptocurrencies is that their value is not tied to the dollar or to other national currencies, but has its own unit. Blockchain provides a mechanism for creating new tokens that makes it difficult to generate more in any other way than is prescribed by the underlying software. To create new units of value, cryptocurrencies must typically be mined by running energy-intensive computer computations. And some of you may be familiar with the news reports that one of the centers for Bitcoin mining is now in Medicine Hat, where the source of available electrical power is one of the key attractions. This whole mechanism is in effect a form of pre-programmed monetary policy. The purchasing power of crypto tokens is by the enabling software. This pre-programmed mechanism for creating cryptocurrencies was originally one of its key selling points. Those who believed that central banks could not be trusted to maintain the value of money were attracted by the idea of a money that is untouched by any public individual or institution. Ironically, this very mechanism has turned out to be its fundamental flaw. When the limited supply of tokens meets a large flow of demand coming from enthusiasts, the result, as we have seen, is wild fluctuations in the value of cryptocurrencies. These fluctuations have drawn in even more speculative money, which has further amplified the price movements. Indeed, many of the Canadians who purchased Bitcoins in 2017 reported that they did so for investment purposes, and that really, I think when it comes down to it, means speculation. The implication of these prices than that of the Canadian dollar, certainly, or of almost any other sovereign money. The value of a Bitcoin in US dollar topped $20,000 in the last year and is now down to around $6,000. Such wide price movements make it unlikely that the current crop of cryptocurrencies would ever be used as money for ordinary purposes like to buy a cup of coffee when there is a stable national currency. Cryptocurrencies are also very expensive to use. Transactions costs were very high in 2017, as much as $55 per transactions, per transaction, compared with almost zero for cash. These costs, of course, have tended to fluctuate. I mean, that was a spike, and they've come down since then. But if transactions volumes were again to push the limits of the network, costs will jump back up again. In short, the current crop of cryptocurrencies is not about to replace the Canadian dollar or other national currencies. These are products that may be largely of interest to three kinds of issuers: investors, who should be fully aware of the risks they are taking; residents of countries where there is no trustworthy national currency; and those undertaking illicit transactions, including tax evasion, money laundering, terrorist financing, for which the property of pseudonymity makes them an ideal way to move funds. Another example that came to mind, which is closer to home, was that I understand that in June of this year, the University of Calgary's website got hacked, and the hackers extracted ransomware, which they demanded in the form of Bitcoin, because it's a pseudonymous and therefore untraceable means of payment. So far, I've been talking about digital tokens launched with the ambition of becoming a form of currency. Now, many digital tokens are being created without any such ambition. Every month, dozens of new crypto products are launched through initial coin offerings, or ICOs. In an ICO, investors purchase a new digital token in exchange for cash or for other, more established crypto assets. Some of these resemble the initial public offerings that private companies use to raise capital by offering their stock to the public for the first time. In this way, they're kind of like crowdfunding, which is a means to raise equity capital without jumping through all the same regulatory hoops that are involved in issuing publicly traded securities. Other ICOs offer the purchaser the right to use services on a platform that is yet to be built, and are thus more like the economic equivalent of a gift card to a benefits to the purchaser are even more nebulous. Those ICOs that function in a similar way as shares in a new company raise all the same issues as any other stock offering, and in fact, Canadian securities regulators are treating them accordingly. Their value is based on the profits from some enterprise, so investors need to be able to verify that the enterprise actually exists and to keep track of what it is doing with the funding that it's raised. In practice, ICOs have not always met that standard. For example, failure to meet funding targets hasn't always resulted in a return of money to the investors. And in cases where funding targets were exceeded, it's not always clear how the ICOs are using the extra money. Thus, while there are certain advantages to a flexible, technologically advanced method of funding innovative enterprises, investors in ICOs need to be wary of fraud and misrepresentation. And of course, this is something the securities regulators are addressing. For example, if the risks are properly managed, crypto assets could serve as a new funding. Maybe to elaborate on that a little bit more, given the steady some of them have already disappeared. Yet it would be a mistake to dismiss all these innovations as fleeting fads. Some products may turn out to be smart and useful by finding better, cheaper, and more competitive ways of filling an actual need. If they do that, they could also challenge the existing business models of established financial institutions. For example, if the risks are properly managed, crypto assets could potentially serve as a new funding tool, allowing small businesses to find the capital they need. Some have also argued that crypto assets could deliver financial services to parts of the population that are being unserved or underserved by existing financial institutions. Even if the products themselves ultimately fail, they do advance the development of technologies that are likely to be useful for a range of other purposes. Crypto assets, in particular, have spurred the development of distributed ledger technology, or DLT, which may have many valuable applications which are already being explored by many companies in the financial system and elsewhere. At the Bank of Canada, we've got into this field ourselves, and through our project Jasper, we've been exploring the potential use of DLT to streamline the settlement of financial transactions. And this technology may have many other uses, such as registries for any trade finances, and even parolees in China. Although crypto assets themselves exist only in cyberspace, they connect with the real economy and the financial system at various junctions and comprise a kind of crypto ecosystem. One point of contact. A second is the ICOs I've just been talking about. Third, certain investment products in the mainstream financial system are linked in some way to the valuation of crypto products. These include derivatives contracts that have been launched on some commodities exchanges and exchange-traded funds. A fourth important point of contact is crypto exchanges, where crypto assets are traded for money or for other crypto assets. Crypto exchanges have been set up in different ways in different cases, which makes them kind of hard to classify. Some exchanges have an economic function that's more similar to that of banks. They basically hold crypto assets on behalf of their clients, so the client actually gives up direct control of the crypto assets themselves and instead has a claim on the exchange itself. Other crypto exchanges function more like electronic trading platforms for crypto assets. The newness of crypto products and the fact that they claim to be delivering many of the same services that are provided by other financial institutions raise some key questions. What risks could they pose? Should they be regulated? And if so, how? As I mentioned earlier, the Bank of Canada itself is not responsible for regulating crypto products. Nonetheless, we've been examining their potential impact on the stability of Canada's financial system, which is something we're responsible for. We've also been participating in international research on them through the Financial Stability Board, or FSB, as well as through the G20 and the G7. Regulators need to examine crypto assets from a number of angles: the potential risks to the stability of the financial system, the integrity of markets and the protection of investors, and protection against abuse of financial flows, such as money laundering and terrorist financing. Protection against abuse of financial... the consensus of policymakers is that crypto products do not risks. This is in part because despite their rapid growth, crypto products have a relatively small footprint in the financial system. The market capitalization of all crypto assets was recently estimated at $230 billion, and the volume of trading in these products at about $15 billion annually. While these seem like big numbers, they are dwarfed by other global financial markets. Global equity markets, for example, alone have a market capitalization of around $100 trillion. Moreover, crypto products are not deeply interconnected with the mainstream financial system. For example, there's little evidence that commercial banks are investing in crypto assets or accepting them as collateral. In this context, the immediate priorities are to address the other two issues I mentioned: investor protection and abuse of financial flows. In these areas, the relevant regulators, both in Canada and internationally, are working hard to adopt their frameworks to cover these new products. But things are evolving rapidly. Crypto assets are growing in size, complexity, and interconnectedness. As the underlying technologies and the design of crypto products evolve, we need to be ready to reassess how they may be affecting financial stability. Some potential aspects include the integrity of payment systems, bank business models, and the exposure of financial institutions and infrastructures. The FSB and related bodies are monitoring this evolution closely. Regulators also have to be forward-thinking about what kind of action may be required. That means putting in place a framework that is sufficiently adaptable so that when products emerge to potentially pose new risks, regulatory agencies will be ready. Crypto products are already regulated in many countries at the national or regional level, but in many jurisdictions, the regulatory framework is far from complete. Also, given that crypto assets are global in scope and not confined by borders, an emerging problem is the gap between different regulatory regimes in different jurisdictions. Different jurisdictions have adopted different regulatory approaches depending on how each of them has defined those assets. When a new product is launched, is it classified as a payments instrument, as a security, as a commodity, or crypto exchanges be called banks, financial market infrastructures, or something else? These classifications differ across jurisdictions and in some cases remain nebulous. Beyond these differences in classifications, the regulatory treatment of these assets differs across jurisdictions. In China, for example, the response has been to ban these products. In Japan, the authorities are creating a framework to manage the risks that are associated with their growth. Such differences among regulations globally, together with the incompleteness of regulation in many jurisdictions, open room for promoters to engage in regulatory arbitrage, developing new products that are designed precisely to exploit them. Regulators must then decide how far they need to go in harmonizing their approaches with other countries. Differences in the regulatory treatment of these products for controlling money laundering and terrorist financing are a particularly pressing concern, which is being addressed at the international level. Such factors pose key challenges for regulatory agencies. Data and a consistent means of collecting them are required to assess emerging risks. And an agreed system is needed to classify new products by their attributes and their economic functions. At the same time, we need to avoid regulation that is so heavy-handed or cumbersome that it stifles innovation. New crypto products could deliver more of what the public wants and bring more competition and financial inclusion to the system. Developments in this space could also spur the growth of technologies that have important positive spin-offs. These concerns, the risks versus the benefits, need to be carefully balanced. The regulatory framework in Canada is still a work in progress, but a number of important steps have already been taken by both the federal and provincial governments, which share jurisdiction in this area. In 2014, the federal government amended Canada's anti-money laundering legislation to include businesses that deal in crypto assets. Regulations based on the legislation are now being finalized. The Canada Revenue Agency also published a note on the tax laws that apply, and the Financial Consumer Agency of Canada published a backgrounder on the risks and tips for using digital currencies. At the provincial level, there's been quite a lot of action, with the Canadian Securities Administrators issuing a staff notice on crypto offerings, both warning investors about various issues: volatility, transparency, valuation, custody and liquidity, the use of unregulated cryptocurrency exchanges, and also indicating what approach would be followed with regard to ICOs. At the Bank of Canada, we are also considering the potential implications of these developments for our own core functions. In particular, we are assessing how we could respond if crypto assets were to evolve in a way that undermines our ability to provide Canadians with a means of payment with stable purchasing power that they can use with confidence. This is related to our ability to implement effective monetary policy, as well as to the security and finality of settlement that we currently provide through our banknotes. While we do not have any doubts currently about our ability to fulfill our mandate, contingency planning is important. The changes driven by technology may turn out to be very rapid. In this context, one of our priorities is to explore, if any, we might recommend to the government that we issue our own digital currency. At the same time, we are studying key design questions related to central bank digital currency, or CBDC, such as what form it might take if it ever existed, and whether it would be anonymous like cash. As it turns out, the questions of under what conditions and in what form are closely intertwined. The design of a CBDC has important implications for its risks and benefits. For example, some major reasons for caution about a central bank digital currency are concerns that it could become a vehicle for illicit transactions, or that it could have significant negative implications for financial intermediation. Unless such risks could be adequately managed through appropriate design, the Bank of Canada would not recommend issuing such a currency. Just for viewers on the webcast, I'm going to repeat a few words. L'une de nos priorités est de déterminer dans quelles conditions la Banque du Canada recommanderait au gouvernement d'émettre une monnaie numérique. Nous étudions aussi les principaux éléments de conception d'une monnaie numérique émise par une banque centrale. Les questions sur les conditions d'émission de ce type de monnaie et sa forme sont étroitement liées. De plus, la conception d'une monnaie numérique de banque centrale a des implications importantes pour les risques et les avantages qu'elle comporte. Nous avons de très bonnes raisons d'être prudents. Par exemple, c'est important de s'assurer qu'une monnaie numérique émise par une banque centrale ne soit pas utilisée dans des opérations illégales ou qu'elle n'ait pas des répercussions très graves sur l'intermédiation financière. Tant que de tels risques ne seront pas maîtrisés grâce à une conception adéquate, la Banque ne recommandera pas l'émission de ce genre de monnaie. Ultimately, then, this exploration is going to require a unique combination of economics, technology, and business strategy, as well as thorough consultation with all stakeholders. We've assembled a multidisciplinary team to do this work, and will provide more details as the research unfolds. We are also exchanging information with other central banks, notably the Swedish Riksbank, which is well along in examining CBDC. The results of our work in this area are already available on a special page on our website, which we're updating as new developments unfold. Now let me wrap up. It's important that Canadians benefit from financial products and services that are better, cheaper, and more flexible. At the same time, we will continue to keep a close eye on the risks associated with crypto assets. We are working with our domestic and international do not pose a risk to the Canadian or the global financial system. Canadians need universal access to means of payment that they can trust. As advances in technology open up opportunities and transform the financial system, we at the Bank of Canada will continue to do what is needed to maintain that trust.
So we do have time for some questions and answers. There are two microphones. I should have mentioned this initially, but there are two microphones there at the back. So if you have a question you'd like to ask Timothy, please go ahead and go to the microphone. I think we've got at least one person heading there.
Okay.
They should be on.
Hi, Harry Fradenberg. I'm a strategy prof here. Thank you for that. All trying to figure out what is going on here. You made allusion at the beginning of your talk to the dot-com of non-survivors. If you were to project from where you stand right now, and you're probably as knowledgeable as anybody about cryptocurrency, can you imagine what 10 years from now this space might look like? I know that's a wide open question, but I thought I'd ask it anyway.
Well, yeah, I mean, it is a wide open question. I mean, it's pretty hard to imagine really how this is going to evolve, and I think that's what's exciting about it. I think some people's response is to kind of dismiss it because we don't really know, but I think our response is you really have to be ready because a lot of these things could actually evolve in a way that we don't expect, and we really need to stay on it, to get a framework in place so that as new products emerge, the regulators are ready to do what's needed. And also, you know, as a central bank, of course, we need to think about how this may be impinging on our own function and therefore what we might have ready to what might have to be ready to have to do. And so this is really, I think, the nature of the situation, that it's very fluid and it's one we really need to keep track of.
Do we have other questions?
From the Haskayne School. I wanted to ask a question maybe a bit more in the legitimate side of the ledger. I've heard about developments in digital ID and authentication to the Canadian payment system. Can you give us a bit of an update there and maybe a preview?
Okay, well, there's certainly a major project underway on updating the Canadian payment system. I don't really want to go into the details of the digital ID part of it, but just to say that that the Bank of Canada is working with the Canadian Payments Canada and with other partners in the financial system to try to actually make use of some of the technological capabilities to deliver payment services that are both faster and more secure and less expensive, and that's quite an important project for my colleagues at the Bank of Canada.
Hi. You mentioned there's differing regulations between jurisdictions. I'm wondering if you can expand on that. How can we fix that gap?
Okay, well, I mean, I gave a couple of illustrations in the speech. The fact that in China they're actually banning these products. In Japan they're regulating them. I think that a lot of other jurisdictions are somewhere in between. They're they're regulating them, and maybe partially, but I think one of the things that I would like to draw attention to is that every month, and somebody's got to decide, do we call this a commodity, do we call it something more like an equity offering, do we call it something something more like a payments instrument, and depending on how you classify it, the regulations are going to differ. And of course, if something is called a commodity in one jurisdiction and the same product is actually called a security somewhere else, then that means that you can potentially have some gaps in the way that the thing is regulated, because that itself implies that there are different rules that apply to it. And of course, that also means that people who are promoting these products are going to shop around. They're going to look for a jurisdiction where the treatment is favorable to their particular product, and they're going to find the regulations that are the most that basically allow them to squeeze their product through in a way that maybe doesn't provide the same safeguards. So this is kind of the flavor of what's going on, and with dozens. Several thousand already issued, of which 40% are already worthless. It's a space that's very rapidly evolving, and it's one that I think internationally we really need to bring together the regulatory approaches much more closely.
I just want to ask, what actually drives the value for crypto assets or securities? What's the underlying asset that really pushes the value or sometimes makes them worthless?
Yeah, well, I mean, to some extent, it's I mean, you have to distinguish between different products. I mean, there are some, as I mentioned, of the ICOs that are really more like an equity offering for a startup, or they're offering, as I said, it's kind of like a gift card. You're paying for services that are to be provided by a certain platform in the future. And in that case, it's really the expectation of what the company will be worth. The same as any other equity offering. It's basically investors form a view of what the company is going to be doing, what its potential future profit streams are going to be, and what those will turn out to be worth at some point in the future. Now, you have other products like Bitcoin or like some of the other so-called cryptocurrencies where it's much more nebulous. And in the case of Bitcoin, initially, I think you'd have to say the value was that I talked about in the speech, the idea by regulators or by central banks, and therefore it's ultimately sort of a libertarian form of money, and so people who believed that narrative were prepared to buy it in the first stages. But then I think later you had people coming in just because they saw the value going up, and it's like any speculative bubble, like a tulip mania or something like that, where people are buying it because they know somebody else thinks it's worth something, and they think they can buy it now and future. So that's a bit of the dynamic in some of these other products. So I think you have to differentiate maybe those different classes of crypto products.
My understanding is that the Bank of Canada sold all of its gold. So as far as the reserves go, so in the future, do you see the Bank of Canada purchasing any gold or cryptocurrencies, and which one do you think you would predict they would buy first, and why?
Well, okay, maybe on the gold side. I mean, basically, Canada used to have a money that was linked to gold, and that stopped in 1971, right? But and after that, it wasn't the Bank of Canada; it was actually the government of Canada held a certain amount of gold, and as part of its international reserves. But then ultimately made the decision to stop holding the gold on the grounds that it wasn't really connected with the money of any major currency anymore, including U.S. dollars, and it was actually more meaningful to hold reserves in the form of foreign exchange, largely U.S. dollars, but also other foreign currencies like euros, and so that's really the current strategy for managing foreign exchange reserves, and that there's no real expectation that that's going to change.
School of Public Policy.
Yes.
My question is, when you talk about having a central bank issued digital currency,
Yeah.
do you foresee that still being in that unit value of its being kind of its own supply and demand, or eventually being paired or set with the value of the Canadian dollar, for example?
Well, there's a bunch of literature out there that talks about this question, and there's some academic literature in particular that talks about central bank digital currencies that could be in a separate means in unit value. But I mean, our sense is that one of our strongest suits is the fact that we are a trusted institution, and we have maintained a pretty stable purchasing power of a Canadian dollar for the last 25 years. We've had an inflation rate that's averaged pretty close to 2%, and it would seem very strange for us to then go out and issue a digital product that was not actually denominated in that unit that we've invested so much in building the confidence of. So that's really kind of our working assumption at this point.
Thank you.
Hi, Arijit here from the MBA program. I understand that banks are using the distributed ledger technology and trying to adopt the blockchain technology. However, if crypto assets were to be released in its full potential, do you see them as a threat to banks and the banking model to be used as currencies?
Those are kind of separate, those are certainly separate points. And I also would like to stress the fact that the blockchain or the distributed ledger technology is one that does have a number of applications which are not necessarily disruptive to the banking system. They could be disruptive to certain parts of it, in the sense that I think that the kind of things that people have been looking at is the idea that a distributed ledger can be a way of streamlining a lot of the back office functions, because a lot of back office functions involve reconciling different accounts. You've got the same transaction appearing on the books of both the buyer and the seller. You've got different parts of the buyer and seller's accounts that have those records, and they have to be all brought into alignment with one another. Distributed ledger implies that everybody's making their adjustments to the same set of accounts, and so there's some streamlining involved in that. And there are certainly companies, including banks, that are exploring the potential to make these functions a lot more cost effective through the distributed ledger mechanism. Now, a little bit of a separate question is what crypto assets themselves are doing in terms of the overall financial system. And as I think I said in the speech, the current crop of crypto assets don't really look like they have the potential to be seriously disruptive to banks' business models, because they're simply not stable enough. I mean, people are not going to say, well, I'm not going to hold a bank deposit anymore. I'm going to hold all my assets in some crypto product, because it just doesn't provide you the stability of purchasing power. If you have money in the bank, you know that you sort of roughly know how far it will go in paying for your everyday expenses. If you have the same amount of money in Bitcoin or any other crypto product, currently you have no idea how far it will go in buying goods and services, and that's really pretty fundamental. So I mean, our expectation is the current crop of crypto products is not going to be a threat to banks in that sense. But of course, as I said, these products are being invented all the time, and there are probably, as we speak, thousands of brilliant people who are trying to figure out how to solve this problem and come up with a form of crypto product which actually is more of a threat to the banks. And at that point, we'll have to watch that very closely and see how the system is going to adjust and to do whatever is needed to make sure the system is still stable.
Thank you.
Last question.
Hello. Yeah. Don't you believe that one of the reasons why the price is so volatile is resulting from the risks associated with these currencies? And do you think that the central bank has a role to play in mitigating this volatility by increasing the supply, let's say, for example? That's one question. And the other question that I have is, how would we relate these cryptocurrencies in terms of whenever we have events like the financial crisis? Do they have any role to play?
Okay, well, maybe a couple of points there. So it's not clear why the Bank of Canada would ever have an interest in trying to stabilize the value of Bitcoin. Not clear if we could. anyway. I mean, I haven't really thought about that, but I'm not sure why we would be important yet. It's not inconsequential, but it's not big enough to be to have an effect on the Canadian economy as a whole. And so, in that context, it's not clear why that would ever be part of our mandate. It's also not clear how we could do that because I mean we'd have to go sort of into buying and selling Bitcoin on a very big scale, which I can't really see that ever being something we'd want to engage in. Now, as far as the financial crisis. I mean, in principle, of course, the sort of thing that happens in a financial crisis is that people often want to get out of conventional financial assets because they have fears about what those assets will be worth, about the creditworthiness of those that are issuing those assets in particular. And in that context, of course, you could see the potential for investors to sort of flee into something that looks more stable than conventional financial assets. Now, my sense is that crypto assets are not yet in that category where they're actually offering more stability than an insured bank deposit, certainly. But one can imagine a situation again where these products evolve to the point where it could actually be a refuge, and that would be a very different ballgame, and might have different implications in the event of a crisis.
Thank you, all of you, for your questions. I think in combination with the speech from Timothy and some of the questions raised, as an academic institution, there's still a lot of research to be done. So perhaps some big ideas can come from this. Before we conclude, I just want to thank the staff from Haskayne that worked in conjunction with the staff from the Banque of Canada to put on this inaugural event, and hopefully we can do many of these in the future. And finally, I want to thank the Deputy Governor, Timothy Lane, for coming. We have a small gift here that I'll present to you.